Hello traders, it's Samurai Trader here to give a recap of today's NQ 133 tick bar market. We had some not bad volume, but I was running a coaching session starting at 4 a.m. so where I am down here in Australia, it's very early morning, of course, in trading the US market. So I can't wait to move back to the States where the hours will be a bit more realistic. But one advantage, of course, of being down under is trading Forex. The London Open is 6 p.m. so if you like to trade of an evening, it makes it an ideal time. So I took a couple of live trades which you're about to see, and then was training the rest of the time, which you'll see on the chart in a moment. So let's have a quick look before I started trading live and just have a look at some of the setups. We can see here at 1:44 a.m. my time, which we had a convergence here of the 200 EMA and the 89, and we had a double top signaled by the two T1 signals. So this is a signal to go short. This one here delivered a good 11 to 20 ticks, whichever whatever your target may have been in between. So this is a very nice trade. Now remember, the most reliable trade that you can actually trade is trading with the trend, and that is where we use the 89 and the 200 for trend direction. Counter trend trading, higher risk. Once you understand the patterns and understand fully what you're looking for, then perhaps as a highly experienced trader, start taking counter trend trades. Otherwise, do not counter trend trade. Stay with the trend. It's the safest and the best form of trading. So this particular trade here, even though our we've got our 89 and our 200 going sideways, so it's signaling some sideways action, what we do have is this: we've got a higher low. So you can see here we've had down here a T19 setup signaled by the T1, and then we've got another T1 here signaling up. You can see where the market's risen, pull back, and we've got another entry signal. Now the ABC signal is, of course, you would not enter until over on this candle here, but in my opinion that's just too late. Now what I do recommend is that you do wait for your Z lag and your zero lag MA, and you can see here where it's magenta and then it turns to cyan. So you actually would not have been in this trade until this candle here, but that well and truly delivered 11 ticks plus. Now traders, as you know, my minimum target is 11 to 13 ticks I'm after, so that is a minimum, and the reason being is I like to have my stop 2 ticks below the closest swing low or swing high. If my stop is larger, I will look at it and take, well, I've got to make sure then that my target at least equals then my stop. So if that was a winner, if you had have taken that trade, I was not on this one, by the way, we had another nice winner there, another T1. Now this also, by the way, was a T10. Now the T10 is signaled by a rising short-term long-term stochastic. As you can probably tell, traders, I'm a little tired right now, and we've had a pullback of our short-term with the curl up. Our T10 is a very high probability trade. Here this is a T2. You can see here our long-term stochastic has been oversold. We pulled right back, it forms a slingshot, and up it goes. Now your entry once again was not until this candle here, if you were following rules and waiting. Now this is an option, by the way, but you'll just find the newer traders, it'll just keep you out of a couple of extra losing trades and just give you a little more comfort when you're learning to trade. We had another T1 here, and we had another a T2 I should say, with a T1 signal as well. The reason I marked this one up, in going for 11 to 13 ticks here, you wouldn't have achieved it by this second signal here, so you would have achieved it up here. So that's why I still marked it up. Once again, following the trend. Let me just move along here. Then we had another T2, and you would have been filled, hit your profit target up here. Now what you have to watch is, we can see here our pivot is will bounce time and time again off pivot. So if I enter a trade, I like to have plenty of room between the trade entry and the pivot itself. Now you can see here we punched through it, still would have delivered, but just an area you'd really need to have caution on. Now I decided to then short the market, and those traders that follow me closely know that I love the pivot bounces signaled or confirmed by a turning zero lag, and we can see here my zero lag had actually turned. Up here you can see where it's turned magenta. My entry, you can see my entry of 10 contracts, so I shorted at market. Now that's the other thing I just want to mention. The NQ can move very quickly. In some strategies that we have, you can put in a limit order where you're not going to get slippage, but generally when you place a market order, particularly with 10 contracts on the NQ, you will get at least one tick slippage, so you need to allow for that. Now because this is a counter trend trade here, it's a T19B we call it. It's also a pivot bounce, so they've got a good probability of delivering. I went for 13 ticks on this particular trade, and on 10 contracts at 650 gross, take away around $50 in brokerage. Now then the market gave me a bit of heat. As you can see here, it came up and tested the top. Once again, my stop is a minimum of 2 ticks above my swing high, so up here, so it didn't stop me out. I had a bit of heat, but then I had a secondary entry which I took for a T10. We can see here our long-term stochastic is falling, our short-terms come up, rolled over, formed a beautiful T10. I shorted a further 10 contracts, so I was filled here for 13 ticks, then finally my 10. Then what did I get? I had an 89 bounce, and usually my targets are the 89 over 200. Just remember, you need to allow the market to bounce off these, because your 89 and the 200s acts as very strong support resistance. Natural fact, we can see then the market come down and we had a 200 bounce. So by this time I'd logged on and I was starting to train my student. And here are the comments that I had on this one. Big candles, no trade. And that's one thing, remembering when you have very large candles, and that move, by the way, that was a very quick move. Those two candles form within a matter of seconds. Is that quite often you'll get a pullback, which is what we had. It wasn't a big pullback, so you still would have been okay if your stop was down here, but I wouldn't have taken that myself personally, because too many of these big moves you'll then have a big reversal, so it can be just really dangerous area to trade. So this is a 200 bounce. Now 200 EMA bounces are a very high probability trade, generally speaking, as long as you don't get these very quick moves or the very large candles where I like to sit out. Now remember, there's always another bus around the corner. If you miss out on a trade, particularly when you're day trading on a 133 tick chart, there's plenty of trades, so patience is a virtue. Remember traders, we're snipers. We're sitting back waiting for a very good shot, almost a perfect shot. Up here we then had a T10 formation. Basically it's also a T25, but as I advised my student, I wouldn't take that. Why? We're right there against the pivot, so we had strong resistance there. It then pulled back, and then we had a T2 where I would have taken a T2 if I was a student, which he's actually learning, so he actually didn't execute in real time. But this is a T2. Now this delivered, I think if I remember, this just delivered 11 ticks, which is what the target is, so it's a perfect T2. Once again, our long-term stochastic is overbought. We have a nice pull down. The only negative here was we're straight off a triple top, and the triple top is 1 2 3, but we did have a T1, and one other thing we had. What do we have? An 89 EMA bounce. Then we come up for a perfect textbook T89. T89 is of course where our entry, or our potential entry, is outside the channel. We had a higher high, we had nice divergence. It wasn't it could have been a little better, perhaps a lower high on our platinum for a short. Now also, perhaps I should just take these off. I don't want to confuse today's session with the trend lines, but we're talking about the trend lines and how you can use those as well, and fractal trend lines, and that's another session for another time. So that was a nice short. Then we had another perfect T10 set up. Now the T10 is where we've got the long-term stochastic, of course, is coming down. We come up, we roll over, and that's a textbook T10. So then we come down, and what have we got? We've got a 200 EMA bounce. Let me just move this along. Now here you've got to be, of course, very careful of his bounces. The thing to be cautious of here, I've come off a T10. Now a T10 is a signal of change, a potential change in market direction, so it's a time to be really cautious here. So we've come down, and so this is a potential change in market direction. We've come down, and you've then got right here, you actually had a short signal. So we can see everything's rolling over, but I've got written down here that's a 200 bounce. Then I wrote down, typed in danger zone. The reason I say danger zone is the amount of times you hover around a 200, and this is over about a 20-minute time period. Remember, time is not your friend. You want momentum when you're trading, and you can see here there's real indecision at this strong support area. And so if you had have taken this trade, this short, and at the time when I put this in, I said, look, this is a real danger zone, don't take it. Look what happened. The market reversed. You almost had a double bottom. You had a T10 form, and that one delivered. Now down here, as the market rose, you then had a potential T1 to the long side. Now here you can see here we had a pin bar or a reversal candle. Your entry wouldn't have been here. Then what else have we got? There's a major problem here. It's a T10, but we're at the pivot, and because we could see earlier in the chart a lot of resistance at that pivot, it's an area to be really cautious of. But once you find a pivot gets tested 3, 4, 5 times, generally speaking, you'll go through it. So down here we had a 200 bounce again, so we've gone up. You had a little divergence trade here. You then had a 200 bounce, but once again you're really close to the pivot, and remembering you don't get your paint bar until you tick up above the second candle. So sometimes these candles can move really quickly, and if you look at them compared to others, it's a fairly, you'd need to have a really large stop. Well, here once again you're going to keep your stop to 11 to 13 ticks anyway. So here we had a reversal. We've got this is a nice divergence trade. You've got a high in price, a lower high on the platinum. So this is really pretty much a textbook. It's identical to the, or very similar to the T89 I took earlier, which was a winner. And if you had have taken this one, it's a bounce off the pivot, and that's what makes this so good. Where you get divergence trades against pivots or resistance or support, they're a much higher probability trade than a standard divergence trade. So let me say that again. Where you have a divergence trade against or with pivot support, you generally they're a much higher probability trade. So moving along here, we had another 200 bounce formation here, where your entry, remembering if you're following my rules for the newer traders, you're waiting for your zero leg to kick up here, right here. But I didn't recommend any trading in this area. That's right, here we had a T10 form at this point as well. And I typed in, what have we got here? A 200 bounce, but it's the 200. We've had very strong resistance, or support I should say, strong support with the 200 right along here. So don't take this one. But then we had a double bottom form with T1. The entry was here, and that really delivered. So if I really quickly give a quick recap just on this little section here, once again, what directions are my longer term moving averages? They're heading up. So therefore, in what direction do you want to take your trades? You only want to trade with the trend. These ones here, there's reasons why you wouldn't take that, the resistance of the pivot. But if you go back and count the pivot, the times we've tested the pivot, we're going to break through. It's only a matter of time. We keep going up there and hitting it. Either we're going to break down or we're going to break out. So here you also had, besides the double bottom, what really made this a really bankable trade is not only have you got a double bottom with the trend, but you've also got divergence on the platinum. So that's a really high probability trade. Now moving along, and this was the last call. We actually, oh no, sorry, we had this one here. Here you weren't, you wouldn't have had profit delivered till up here. This here was a T10. Now we didn't have the paint bar, but that's okay. If you've got the pullback as we had here, we can see here where on our zero lag it turned magenta and it turned back cyan, so you've got an entry. But to get delivered your minimum of 11 ticks, you're up here. Now you had a nice tight stop, but once again your stop is 2 ticks below your little swing low here. You then had another entry here, but you were still in this trade here unless you were going to double up, which is I don't generally recommend. And this was actually a T2. Now a T2 with the T1 signal, a high probability trade, but we can see here we tick down, and if I just check this, I think it only ticked down 1 tick against us there. That's a low of 73.25, low of 73. So you are still in that trade. If you had have not taken this trade and only be trading the paint bars, and I just should point that out, a lot of our traders, all they do is wait for these paint bars, we call these the T1s, with the trend. It's a high probability trade setup if you're trading it with the trend, that is following the 89 and the 200. So if you had have entered this one, you still were fine. Remember, our stop is where 2 ticks below. That tick down gave you some pressure there, 1 tick below, so you were still in that trade, and you actually then had an entry. This is a perfect 89 EMA bounce. So you had an entry here, you still would have been in that trade till over here, and you may have decided to add on to your position with an 89 EMA bounce here. Then we can see here we had some erratic movement as the market headed to a close. So traders, a quick recap, some great trading today. I had 2 out of 2 there. I had some great trades also on the ES, so I've hit my target, and I'm about to go and do a recap of the last what is it now, the last 12 hours on the euro dollar 5 range. There's some great trading action there as well. So traders, look forward to our next recap. Thank you.